think Kudlow is correct. My financial guru looks at several financial indicators, a couple of them standing out right now. That's the LEI, leading economic indicator, and the differential between short-term interest rates and long-term interest rates, these lending rates, if you will. They're right where, these fundamentals are right where they need to be. And one more thing I would point out, you know, the last precipitous drop, the huge one that we had in, what was it, 2007, 2008 into 2009 of the stock market, and then it started to recover, was really a reaction of a larger problem that was going on in this country, and that was the defaulting on all of these loans.
That's exactly right. I mean, the stock market is doing things that you would ordinarily expect the stock market to do. It's going to have periods of gains and periods of declines. And it's really like Warren Buffett says, if you can't afford to lose money, then you shouldn't be investing in the first place. Now, that said, there are some underlying factors that are making this decline happen. One of them is the trade dispute that Trump has with China. And we saw that kind of tense up a little bit last week when Mike Pence went to a couple of summits and came back with some statements that the U.S. was not in any hurry to change course until China changed its ways. A lot of people saw that as sort of a downbeat note ahead of Trump's meeting with President Xi at the Buenos Aires G20 at the end of this month. So that was one. Brexit's been another. A lot of bad headlines about that. But the underlying economy, like Kudlow says, is pretty solid. I mean, the leading economic indicators index, which you mentioned, the job market certainly,
right.
Very low unemployment. And economists generally see things, you know, humming along pretty steadily, despite this kind of shakeup that we've seen this, you know, in the past week and especially today.
So you just mentioned one of the wild cards, and that is trade. It has a correlation with obviously the political environment in Washington, D.C., but so does another wild card, and that is interest rates. You have Jerome Powell
Absolutely.
saying, hey, you know, it looks like there's probably going to be another increase in rates before the end of the year. I heard Jim Cramer say today, hey, Jerome, if you follow through with that threat, if you want to call it that, a threat, where we are right now in the stock market is going to be a high point. In other words, there's going to be another drop. And then, of course, we have to be prepared for what happens in 2019. So you have to wonder if the Federal Reserve is paying attention to not only the LEI and housing and other indicators, but also the sentiment that's coming out of Wall Street and just the sentiment from you and I.
I think the Fed does pay attention to that. Now, previous Fed chairmen have also said that they don't base their decisions solely on the markets. That said, two of the members of the Fed's Monetary Policy Committee have kind of backed away from some of the more hawkish stances in the past week. UBS came out with a note earlier suggesting that, you know, yeah, the Fed may go ahead with the 4 hikes this year, which means another one in December, but there's no reason to get ahead of itself next year. So maybe we would see that slow down a little. Certainly that's something that makes consumers worry. If you have credit cards with lots of debt on them and you end up paying more than you were before, that's going to make you stop spending elsewhere. So it certainly could be a drag on the economy. And it's kind of a drag for businesses too, because the higher interest rates are, the more it costs them to make capital investments. They typically don't take all of that out of a cash pile. They issue bonds to pay for it. And if you've got to pay more to your investors in those bonds, then you're going to spend less on your new factories, on your new office buildings, on your new equipment. So it's certainly something I hope the Fed's paying attention to.
I do too. Bottom line, from this seat, I think by June 2019, right now is going to look like a major buying opportunity in the stock market. And one more thing Warren Buffett said, be greedy when people are fearful. Something I always try to remember.
Absolutely.
James, thank you.
Want to see more videos like this? Click on the link below and subscribe to One America News on YouTube. And call your cable provider and kindly demand that One America News is added to your lineup. Call and subscribe today.